can hear you. You can see my screen, right? So we'll be continuing with the other entry modules. So like I told you before, most pairs have the entry modules that they expect, and they have the ones that they do not expect. Now for most pairs that range, I told you probably your basic market structure or the advanced. I told you we have trendy market, which is uptrend, and then we have ONG market, which is in between. So now a pair that is ranging, you cannot use a continuation model for a pair that just do things like this. It will not work, because what it does, it takes out the point of interest. It takes them out completely. It do not work. Okay, now you can only trade the continuation model that we did in the last class. You can only use it for a trending market. Okay, then for pairs that range, you check the other entry model to check them out as well. So we have so many entry models, and the few ones that I say I know, because it's actually what I know, I will teach you. The few ones I know is what I am going to teach you. Okay, so we're going to talk about the first one, or maybe the second, or third. Yeah, second. We already did the first one, so we're going to be talking about the second one, which is the reclaimed block entry.
Sorry, you're recording, right?
I am. Reclaimed block entry model. Now, what is the reclaimed block entry model? Now, if you check English language, reclamation or reclaim is an English word. So if you check the meaning of to reclaim something, it means to take back something that was lost or given away, or better, to restore something to a better state. Okay, now this is your entry before. Maybe if price, remember I said the definition of reclaim via English language is to take back something that was lost. Now if somebody else enters here and the person loses on this trade, simple reclamation is price coming above this place and coming back to it. That is reclaiming the point of interest. Now how does reclamation happen? Now price has to take out, I don't know, okay, I don't know if I should teach breaker block first, because actually the failure of a breaker block that creates reclamation. So we'll come back to this. Let me keep it aside. Let's talk about breaker block. Now I do not rely so much on breaker block, because I prefer using mitigation block to breaker block, because breaker block doesn't have a good win rate at all. If breaker block has a good win rate, then reclamation, which is reclaim block, is not supposed to hold, because each time this you try to sell from a failure of a zone, breaker block is simply the failure of an order block, or let us say an order block with negligible reaction. The failure of an order block with negligible reaction before the failure is breaker block. I don't know if you're writing. Now, the failure of a breaker block is what gives you reclaimed block. So let's take it a step at a time. What is the meaning of negligible? Yeah, it means a small or unimportant movement that could be considered as insignificant. What does that mean? Now, these things I'm reading are just simple dictionary meaning of these things. Okay, I'm trying to break it down. For example, let us assume that this is your point of interest. Each time price comes to this point of interest and it takes it out with a force, that could be considered insignificant, like it did not even try to move at all, probably went up like this and went like this, but just something insignificant, an insignificant movement before the failure of that particular zone. Could be inducement, could be disruption, but normally you should not, if price takes out um inducement, you're not supposed to trade counter, like against the trend. Trying to sell from an inducement is like a counter trade, because what confirms a sell should be the disruption taken out. So let's assume this is a disruption instead. So now when price takes out this disruption low with an insignificant reaction, it is considered an insignificant reaction before the failure, a reaction that could be ignored. Okay, it is considered as a breaker block. Now, it can also appear in the downtrend as well. Now, it happens that price takes it out with little or no reaction, like just a little move, and I told you about the flip zones as well. Sorry, I've not mentioned that. I'll mention it right away. Now, it could also occur in a point like this. It depends on how price takes this particular zone out. Remember that this zone, once upon a time, could be a valid high before. So if it gets taken out, then it is considered what, as insignificant. But I do not rely on breaker block, because they don't give a very good win rate. But because I want to explain reclaim block, I have to explain breaker block. I don't trade it. In short, not even like I don't rely. I do not trade breaker block. I'm not even supposed to teach it because I don't trade it. But I have to explain it to you, because some pairs respect it. That's why I said I'll teach you everything, and then you decide which of them to use with the pairs that they respect. Gold does not respect breaker block. It does not respect breaker block. Instead, it would rather use a mitigation block in place of breaker block. Like, which entry was that? The entry that we had, I think that was last 2 weeks Friday. To some people, they will feel like this would have been a breaker block. It should not even, this is a breaker block. Now, price took out this low with no reaction. This breaker block stuff, it happens with would I say this heavy momentum candle with FVGs. So if this breaker block, just as it closed here with these FVGs now, price will want to fill those FVG, meaning that this breaker block will be ignored. How do I mean it will be ignored? You can see that price, I told you, breaker blocks with no significant reaction to the point of interest, which means what? It has to just take it out. Either we just little, not even up to this point, at least here, and then it takes it out with this momentum candle, and then what? The low becomes your entry, and then your SL comes above. But let's assume that this low was our entry. But what happened? Price ignored that low. I went for mitigation. Look at it. Price ignored that low and it went for the mitigation. It went for the mitigation, and that was where the sell came out from. So if somebody that was using this breaker block now, and the person entry, because these people use very slim entry, the person's entry is here, and then the SL, you will see that you hit SL. So I don't really rely on it. I rather use it for reclamation. I rather use reclamation or mitigation in place of breaker block. But I will still explain it to you, because it's the failure of this breaker block that cause that will be considered as reclaimed block. So a breaker block is simply priced in a zone. Talking about zone, I mean, for example, your inducement, but you don't have to trade against the trend. So let's say price at your disruption takes out your disruption with no reaction. Let me read it how I wrote it in my notes. The failure of an order block could be just, I'm supposed to write a zone, not order block, because this is not an order block. This is just a disruption low, a zone. So a failure of a zone with no significant reaction before the failure. Don't forget, before the failure, no significant reaction before, write it down, before the failure creates a breaker block. The failure of a zone could be your inducement, could be your external, with no significant reaction before the failure creates a breaker block. All right. So I would not use a breaker block. I would rather use a mitigation block or a reclaim block. Now that's for breaker block. It's not very important, so I won't even emphasize so much on it. But it could happen in between your break or structure. But price has to create, to be honest, the point where you have to use breaker block, you would rather see mitigation block there and use it. Like for example, we had breaker. This is a breaker block over here. Okay. And if I'm being honest with you, what actually price came back for was this FVG. FVG has more importance because these are gaps that was created in the candles, and price do not like creating gap. Check all the gaps that are created. 75% of time price comes back to cover them. All these things that are created, whether it covers it in your favor or not, it finds a way to cover them. These things price came back to cover them. These things price came back to cover them. So if it creates gap, it finds a way to fill them up. So somebody might say yes, that this was a breaker block, fine, that's their own business. But the reason price came back here was for this FVG. But some pair, you can trade breaker block, don't need FVG. Okay, it's not compulsory. Once it start looking like it has an FVG, that's a mitigation block. Breaker block do not compulsorily need an FVG, fair value gap. Okay, so it takes that with no significant reaction. That becomes your breaker block. Now, the main reason why we are just emphasizing briefly on this breaker block is because of our reclaimed block. Now, what is a reclaimed block? Now, the failure of a breaker block creates a reclaim block. So why are we hoping for a breaker block to fail before we use a reclaim block? That should tell you that a breaker block does not have so much power in them. It does not have so much power in them, because now if this year is your disruption, the only time I can try to like buy directly from inducement, it's even on some pairs. Some pairs don't even this gold reclaim block at inducement just started happening few months back, before it like to happen at the disruption. Now the truth about it is I do not trade directly at a point of interest. When we get to confirmation, I will tell you why. I do not trade directly at it. You never, even if I do my buy POI here, I don't enter directly from this point. There are some things I look out for. When we get to confirmation, I'm going to tell you, but that does not mean that the point of interest is wrong. As a matter of fact, I prefer a point of interest to be taken out before I enter. We'll get to that anyway. So let's proceed. Now the failure of a breaker block, let's say price, this is supposed to be a buy zone, and price takes it out. Now the failure of this buy zone as breaker block, breaker block as this place has been taken out now, with the body of the candle, breaker block, it is supposed to start selling. It is supposed to start selling. If you are not hearing me, it is your own speaker or something. Increase your network, check your network, increase your volume from my personal call or something, please, because if they were not hearing, majority of people would have said they are not hearing. So even it's like 1 or 2 persons, then it's probably their personal network, or Spar would have told me. So now a breaker block, this would have been a sell from here. I'm correct. Now the failure of this breaker block is when it comes above this sell POI, where people were considering a sell. That is where a reclaim block comes in. So the failure of a breaker block bets a reclaim block. It simply has to take out the low. The only thing is that sometimes this thing goes a bit far. And I taught you guys point of interest. So talking about point of interest, from where your entry is down to this last low is your point of interest. So you have to find any way you can to make sure that even if you put your SL here, if you put your entry here, you put your entry anywhere, you put your entry inside here, only what can invalidate this reclaim block is when this low gets taken out. Okay, but sometimes you are lucky, you put it here and then it doesn't go far, it just triggers and it moves. Sometimes it comes down to this point before it moves. That's that pair and whatever it wants to do. Okay, so a reclaim block is a failed breaker block. A reclaim block is a failed breaker block. A breaker block is price movement taking out a zone with no significant reaction before it got taken out. A reclamation or reclaim block is simply price coming back to your zone after taking it out. Could take it out with the body of the candle, could take it out with the wick, but once it comes above it, that is it. Now let's just take 2 examples on, because I want to treat all the entries today. So let's check some few examples I'll take from gold and GU. It depends on the pair. A reclamation can occur at the inducement. Example number 1, a break of structure here. This was our inducement. No, let me draw this well. I think I don't even like start from the usual to like get the entries and all of that. Let me start from here. So we had this was the inducement, whatever. This was the break of structure here for this disruption low, and then what price took out this guy. After taking it out, now first of all, if you want to use something like this as your entry, it means that there should be some of you that are just marking random order block. People that ask me what is an order block and how to get a valid order block, like a valid demand, it should have an FVG in it. That's one qualification. I'll still get to that. So this FVG is what price will also come to feel. There should just be something that is dragging price, not just your liquidity. And then also one thing happened, and I told you guys, I talked about engineered liquidity. What's engineered liquidity? Price looking like he wanted to trigger this guy. You know what this thing came to do? It's like it's called an engineered liquidity. It simply came down to this inducement to make people feel like he wants to buy directly from. That's why I told you, buying directly from the inducement, it doesn't have a lasting win rate, or it doesn't have consistency. Okay, now this thing price did there was to create more liquidity before completely taking everybody out, because this is simply an inducement and nothing can change it from being an inducement. No matter how we sugarcoat it, even this reclaim block cannot change it. That's why reclaim block at inducement doesn't even work 70% of time. So it's engineered price there, and I'm very sure that some people will buy directly from this place. The reason is because what they have seen an engineered liquidity. When price comes almost at your zone and then rejects with a long wick, it's called an engineered liquidity. Something like it happens even in your disruption. It makes you feel like you have a missed entry. No, it will go up and then come back and take that engineered liquidity out. It made people to FOMO. So many people at this thing rejected we start entry from here, but afterward I am sure they will not take profit here. We like expecting price at this point or something, and then it comes back now to take everybody out. So the process of it taking everybody out, and then the failure of the people might also want to, like, as this thing closed like this now, could probably want to sell. I don't know, but the failure of a breaker block is what gives us this reclaimed block. Now after the inducement got taken out, price came back to reclaim that point of interest. Price came back to reclaim the point of interest. Above all entry models, the one with the best risk to reward is mitigation block. That person that was even complaining that mitigation block doesn't have a good risk to reward, probably the person has not even like watched the video or back test it or something. That's the last thing you could ever say. Mitigation block give 1 to 20 weeks to reward. I told you it does 1 to 3, except it doesn't want to respect that point of interest, that mitigation, that FVG, except it doesn't want to expect it. I told you, once it moves, mitigation block, once it moves, it like takes time before it comes back again to entry. It can get to one, once it gets to 1 to 3, coming back to entry is like, it doesn't come back. If it comes back to entry, it's coming to take you out. That's just the truth. If it's coming back to entry after 1 to 3, it's coming to take you out. So after 1 to 3, you can just set break even, because after there it goes a long way. So yeah, like I was saying, and then secondly again, now price later came back to take out. See why I said that what's the name? Breaker block don't have a good entry, good win rate. Now price took out this thing with no reaction again. This thing here now is a breaker block. But what if you had sold from this point? You will take a loss. But imagine, I told you, if the FVG is very big like this, what you should do is simply just take 50% of it. If it's this one that is even big, you can take 25%. This thing is very, very big. Even 50% is very big. So the best thing, this kind of long week, because I think this week is from news, you can't afford to lose too much. So you have to like take 25%. 25% should be around here. That place you can manage it, but fear of missed entry will make people like want to take. I'm not even sure anybody can take this full this. But what actually worked here was mitigation block, and the breaker block failed. So reclaim block, little price taking out the a valid zone with little or no significant reaction, and then coming back above it. Let's take another example. I think we had one played out, the inducement. I'll still go to GU. I saw one played out this morning also. I think where is the guy? Okay. So we had this guy here. Price took him out and then came back to reclaim it. So in some cases where they have long weeks like this, what you can do is take out 50%. Anytime your entry is very long and you don't want to miss it, just take out 50%. That ends it. And you can see price respected it. Make sure before you trade any new pair, make sure you check the entry model that they respect. No, ranging pairs do not respect mitigation block at all. It doesn't send it at all. Don't even go and waste your money. When a pair is moving like this, you can't. That's why I told you I won't go to breakout. I'm not trading till it breaks out. And after I broke out, we got a very sweet entry. Yeah, some people do not. I think this thing happened around 2. I was not even awake. I did not take it. So we had a mitigation block entry here. Why is us to break structure in the FVG? Some of you know price to do something like this on the week, and you say that this is not your entry. Please, it has to be in this FVG. Anyhow, it has to be on the FVG. It should be, whether just tiny something like this one. It should not touch the candle. Let's zoom it and you will see that this, if this had touched the candle, I would have corrected everybody that said that this was their entry, that it was not their entry. And this kind of FVG looks very big. So I've told you, when the FVG is big, simply take out 50% of it. Just 50% is enough for what you want to do. Don't enter directly from here. The best that can happen is missed entry. It's better than risking so much on a trade. And you won't even get a good risk to reward. But look at this. Dual SLQ. I don't use dual SLQ like this one now. This is 15 minutes SLQ. It's not It's for people that already got in before. It's not for you that you just want to enter. This one is people that want to keep stacking, keep going. Then they can go to like 15 minutes to look for this one. Another one, I think another one occurred on 15 minutes here. Somebody got in from here. So you that don't have entry before, using something of low, going to the 15 minute for low probability is not good. Okay, people that have got in before can open positions when they have their re-entries here. They can even risk here too for dual SLQ, because this is actually 15-minute break of structure. This is a break of structure in 15 minutes, and it happened the FVG as well. But I think price snubbed it. I don't know if we come back to feel it. So they can risk it, but you that don't have entry before, you feel like it's not a good thing anyway. So let's take one last example. Let's check GU. I think I'm using pairs that respect the entry model. Okay, if you want to know more, you can check it as well with whatever entry pairs you want to use. You'll surely see which it respects. So I think also an inducement, yes. So took it out and then came back to reclaim it. So if this GU, if he had like something like this, a red candle and then green candle here and then green candle here, this last red candle created FVG here, green candle, then my entry, and then this was the disruption low, my entry will now be on this red candle. Why? Because it's an FVG above. I will take my entry from there. But since this one is a week, your entry can be either on the week, but whatever your entry will be, that place that price retraced from, before coming back up, is your protected low. So anywhere you put your entry, you bear in mind that what your SL has to be below there, because if your SL is not below there, even if price retraces within inside your SL like this before moving forward and your SL was here, it doesn't invalidate the whole theory of reclaim block. It is still valid because the protected low has not been taken out. It is still valid. Okay, so this guy taken out and then reclamation till price, but up to this level. And you know why? Let's check if there's any other example below. So I think we had a reclamation here. I think we did. Let's check. Yes, we did. Over here. The same thing for this FVG. I wanted to also correct something. In case you see me putting my SL, what is that? In case you see me putting my SL like probably like within year to year, is my own personal preference. What invalidates this whole FVG is to this last low. Okay, it's personal preference. I know that once it like goes below this break of structure, I'm no more comfortable with that trade again, even if it later plays out. That's why. It's just my own personal decision, nothing much. So I think we also got a reclamation one time like that again. I think here, okay, this was the disruption that got reclaimed. This was the low that got taken out. I don't know how anybody that traded this got that entry, but I think there was a continuation from, I think this was the 15 minutes here. It was 15-minute continuation here, and that held. So it's 15 minutes. This is not that. What you want to know, you know, from the way it looks. I just know that this is the 15 minutes. If I go to the 15 minutes now, that's where that whole thing came out from. Yeah. Yes, got it. So it was from the 15 minutes. I knew that that's not a 30 minutes candle at all. So even if you had missed it, like I said before, I don't even bother entering directly from these guys, especially when it doesn't have a valid demand zone before, and I'm not sure where to put my entry for the reclamation. I rather just wait for continuation. Like another 30 minutes, a valid demand zone first of all should have an FVG. It's supposed to be something like this, and then one that has an FVG, so that in case somebody is placing their entry, the entry has to be here. So once it doesn't have, it just like scattered candle around. I don't even waste my time. I just allow price to take it out, and I know it will take it out. That's how I told people for that gold. How did I know? There was no valid demand there. There was no valid demand there. The other one, there was no valid supply there. It was just scattered candles, scattered. Those things cannot hold price. That's why price keeps taking them out. When these candles are too scattered, some of them that holds is just by luck. When they do not have FVG there, because price needs to grab something other than the liquidity. Price needs to feel an imbalance. So when it cannot like see what to take out, then it just takes everybody out, then comes back to play out. So the reclamation also held here. And also another model of reclamation is after price has taken out that zone. I think I forgot before to mention it. There's a popular trader on Twitter that also uses this particular one. After price has taken out that zone, if price creates a break of structure like this before taking out that zone, that break of structure could be reclaimed like this. Could be reclaimed like this. Okay, could be reclaimed like this. It's still the model. It still takes out this zone. I think I need to drop like one example on this one because I just mentioned it now. So it could be reclaimed like, but it has to be in a valid zone. These things are like continuation. It's not like when you just get your entry and then you just like use it. No. Okay, these things are like in continuation. Okay, so let's just check one example for this particular type of reclamation. This one, after it has taken it out like this, and then probably reclaimed it, or it's not like go down to this point, but you know your SL still has to be below this guy. That's where your SL have to be below this guy. Because that's your protected low. Okay, let's check another trade to like check this example. I think I saw that on I think which pair is that? Okay, I think GBP JPY. Think price reclaim a zone, and it's not just like it has to like also take out the point before reclaiming. Okay, it can also, that zone can work out. For example, let's use this place. That zone can work out, for example, and later still come back to reclaim. It happens when it has like a break of structure like this. It creates like, this is a high now. This is like um what is that? This if this was not um if this was taken out, then we would have considered this place as internal inducement. So it's just like this place failed and then was reclaimed, something like this. So even when it did not like take out your zone, it could also be reclaimed. Take another one, showed up here again. Doesn't really need inducement as far after the reconstruction that one should occur. No, structural liquidity can work out for it. It's just a continuation model 2. This one is for pairs that range too much. You can see that they always come back to clear structural liquidity and then reclaim it like that, clear out, then reclaimed it. So this one is for this type. It could take it out and then reclaim it properly, take it out and then reclaim it properly like this, and then it can still come back to still reclaim. If this zone, after this movement here, this zone broke structure like this, it could come back to reclaim this point. That's this type. So let's move over to the next one. We have stayed too long on the reclaim block. Let's move over to the next one. So the next one we're doing is flip zone. I don't know if we have been talking about flip zone. Flip zone also is not, the time flip zone was very effective, I don't think it's not anymore, but let me just explain it. Like flip as a whole. Now when price takes out a point of interest, it could be considered as flipping it. Now you have your structural liquidity, your transactional liquidity, and also this transactional liquidity, I could also call it your internals as well. So if this high, once price takes this high and it creates FVG, it could be seen as reclamation, and it could also be seen as breaker block. I would rather say reclamation. Wherever price takes out previous strong point, it is considered as flip. It's like flipping the previous strong point. I'm still going to talk about the qualities of a valid demand zone. Don't worry, I'll get to that. So it could take out this high. There's an FVG, it could serve as mitigation block. If there's no FVG, you can decide to take the risk for mitigation for breaker block. If there's an FVG, I would rather want an FVG to be there, so that there will be something price coming back to fill other than just this previous point for it. So once it takes it out, it is valid as it is called flipping of the previous strong point. Now the whole theory of flip zone before now was, let me just say, I don't use it, okay, but I will still teach you in case there are pairs that expect it, but I do not use it. The whole theory was like this. For example, we have this guy. Let's say a price took out this guy now. This is for our time frame, for example. These are transactional liquidity. Now each of these transactional liquidity, people regard it as that they do have demand supplies. Okay, this sell, they have supplies that were kept in this point. Okay, and they will say that whenever price comes back to take out this guy, that the low is considered as a flip zone. Okay, let's say these are internals. If price takes out this internal liquidity, previous internal liquidity, which is now internal liquidity, previous strong high internally, if price takes it out, now they consider this inducement as safe to buy from, so far that this inducement have structural liquidity close to it, or price engineers liquidity. But it does not work like that any in too many pairs. Okay, it doesn't work like that. They actually want this place to be taken out first. Once this place is taken out, is considered as flip zone. The low is considered as a flip zone. Now price has to just create structural liquidity inside, or engineer, like come here and then weak reject here, as if there's a missed entry, then come back to buy. And then if it happens here again, it takes out this high, this low, if it has structural liquidity or it engineers price. That's why they say FOMO is not good, except if after you FOMO you still maintain your SL, because sometimes those FOMO are just engineered liquidity. You think price has left you, and the price returns back to your entry after you risked so much, and then start buying or selling for your initial entry. So engineers liquidity and then comes back to buy from this zone. Goes on and on, taking this out, but he has to take out a previous strong point for that name flip zone to be. So that's the definition and the whole theory of flip zone. I do not trade it. Anything that has to do with trading directly from inducement, even trade reclaimed block at inducement, used to fear me. I cannot lie to you. Anything that is for me to trade directly from an inducement, I don't find it like pleasing. I prefer price to like take out a particular zone. If you go to the disruption, I don't even buy directly from disruption. I don't buy there, I don't sell there. Even when it has a valid demand, I rather follow up with the continuation, because most times this pair like to take out this point and reclaim it. You know, the point where price will now take out your SL before reclaiming that point of interest. At least, even if you still recover the money you lost, at least you have lost money. That would have been a profit to you, but now that is break even to you. You just recover the money you lost, not like you made a new one. So I do not enter directly from the point of interest, except it's like a reclamation. I saw it when it has already kicked everybody out. Then I enter like that and then follow up with the continuation model. Continuation model don't work on ranging market. It only works on trending market, uptrend, downtrend. This zigzag market in a row, it doesn't work. Okay, it does not work. So what's the next entry model that we have here? We have done breaker block, we have done reclaimed block. I've told you about flip zone. We did mitigation block yesterday. Now the last one, I did not talk more on this flip zone and breaker block because I don't trade it, and I don't even have too much idea about it, because the few times I tried it and I backtested it, it has a very low win rate, especially this breaker block. The reason is because if I'm waiting for reclaim block, the first SL I will have is trying to sell at breaker block. So if I'm trying to sell at breaker block, I must have SL for my reclaim block to work. Why? Because that SL is coming from the breaker block that failed, because it's a failed breaker block that creates a reclaim block. So you cannot stick with the two of them. You have to choose one and focus on it. Except if you backtest a pair and you respect breaker block, then fine, you go with it. Then the last one we have is SBI model, which is sweep, break and inducement, the most popular entry model on Twitter. SBI, sweep, price sweeps liquidity, break structure and create inducement. This particular entry model is a deceit. Why do I say it's a deceit? Now, this entry model have qualities that if they are not met, you can't be very lucky. And this entry model, I don't even like it anymore because it's like 50-50, because a lot of people misuse it. As the name implies, SBI, sweep, it should sweep a structural liquidity, or it should sweep an inducement, anything, but it should sweep something before it creates this new internal. It should sweep something. Now when it sweeps, it now has to create an inducement. And the worst part of everything is, for that entry model to buy directly from this place, that inducement has to be within the 50% level. And not just that, for it to work with an efficient win rate, it also needs to have like an FVG to engineer price. So rather than me risking all these qualities, even if I see the entry model here, two things I can wait for is, even if price later buys here, if it breaks structure before buying here, I can enter with reclaim block from here, where my SLB, my SL, whether it has inducement or not, can be just structural liquidity inside here. The inducement here is not compulsory. Then what? I enter at this point, or here. Here is fair, because it sometimes doesn't go back to this point. Enter here, and then what? And I join them. When I see if it's like gold or any pair that respects mitigation, I follow up like that. Or if it still brings out this reclaim block of this pattern, I also follow up like that. So I do not trust these guys, but the SBI, it's rare to see somebody now say buy or sell directly at a demand zone, because most of these demand and supply zones are fake out. Now the qualities of a valid demand zone, it's hard for it to like, for price to meet these qualities just one time. It's actually hard. Sometimes it does half of it, and the other time it's not doing the rest. Now the qualities of this valid demand zone, since it's a buy, it has to be at the discount, which is below what, 50%. Number one. Number two, it has to have an imbalance. Price should create fair value gap. Price should create fair value gap, FVG, that's an imbalance. Then it should sweep, whether it's sweeping structural liquidity here or it created its own structural liquidity here. I don't even use this entry model, I have already said it before. You might see it, I might just like show it, and then expecting price to come there to buy or whatever it does, and I follow up from there. But for me to be the victim of the flip, no. So price can take it out. It should either create its own structural liquidity like this, or it should sweep structural liquidity from this side, anyhow, or it should create its own and sweep it. But they should be, write it, qualities of valid demand or this demand or supply zone. Number one, if it's for demand, it should be at the discount. If it's for supply, should be at the premium. Then the second one, and all these things are compulsory. It's not even like you can negotiate with it. No, it should have an imbalance, which is FVG. The third one, it should have a sweep, whether it's sweeping from here or it's sweeping from here. Next one, it should break structure. Even if the breaking of structure is internal like this, it should break structure. BOS. Then the next one, compulsorily there should be an inducement, IDM. Then lastly, it should be in line with the trend. So discount, imbalance, FVG, sweep, inducement still within the 50% level, and it should be in line with the trend. So to save yourself the stress, there are a lot of models you can use to continue. But if you back test and you see that there are pairs that actually, especially synthetic pairs, they respect buying them directly. Okay, the ones that range, they like you buying them directly. If you check, and then this particular pair loves coming down to after grabbing liquidity, and then it comes to buy directly from the point of interest, fine, you are good to go. But if you miss this one, you have different ways to follow it up, except it doesn't come back to trigger. But I do not enter directly for the point of interest. That is on that. I don't know if I can see any example. This is the last one. I don't know if I can see any example of this one anywhere. I would see it on synthetic. Okay, let's just like check synthetic. Best like V75. I think mitigation block works here. I was checking something today. Let's check. No, this ranging was ranging all through this point. Any pairs that range, don't try to like. It hardly works, except if at that point it's like moving normal, then it could play out. But when it starts like ranging, see this one now taking out this guy. No, it's just better after inducement taking away. This was inducement. Sexual liquidity, no. I'm looking for the SBI model. Let me ignore this for now. Okay, it might just like take our time. It works very well on this synthetic. That's why a lot of people trade it. But it has conditions. It's hard to see the full conditions met. That's just the truth. For you to see price respect this thing, maybe you need connection. Like price to create all of them complete. For some of them as well, they like respect it anyhow it is. This price of this week 75 is ranging too much. I'm looking for the SBI model, and it's even hard to, the time I think I posted something like that on my status. That's one thing about this whole SBI. There was the time that people traded just this SBI. I know the funny thing was that you could stay a full month without seeing a setup. I'm not even going to lie to you. You can stay a full month without seeing a setup. That's how hard this thing is. Because why? You're looking for quality over quantity, but you are not even seeing quality, you are not even seeing quantity. In short, you are not even seeing anyone. You know how that could be. So apparently you just like need a working system that even if 2-3 times a week is not bad, not staying like for so many times and then you're not cheating. Looking for this model, it's even hard to see. And then price comes back to it. It's really, 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 really hard. It's really, really hard. What I keep saying is reclamation. That's what I keep saying. I keep saying reclamation. This reclamation. I'm not saying it. I don't know. I can give an example with this because I'm not actually saying it. I needed to like give an example of it. I'm not saying anyone. Even if it's the one that even failed. I'm not even saying even the one that failed. I posted it on my status. If you're waiting for this, I think there was the time they were calling it Quasimodo Reversal. There are so many names people have called this thing because it was the holy grail early last year. They called it Quasimodo Reversal, Quasimodo Level. They called it then they changed it to SBI sweep, break, and then inducement. Can't see it. I have to let it be because our time is already far spent, so I can take questions. It's not a necessity as such. This is how it looks. If you see it, you can ask me question to confirm if that is it. Then I'll tell you. But I don't trade it directly. This is how it looks. There's a sweep and then there's a break of structure. But some pairs actually do respect it till now. And then it's not like you're buying from the break of structure, no. Like this one, no. You're buying from here. And most of these pairs create a lot of wick. So even to see a valid demand, that's why I boldly told the people that price will not respect that gold. All those points that gold was just like creating those stuff. I knew price will not respect it because price did not create valid demand at all those points. So but JPY pairs respect reclamation very, very well because they like to range. So they like sweeping a point of interest, coming back. They later come back again. They don't like going far. Unlike gold, when he wants to buy, he just buys. These ones like they move like snail. You see now, just look at. They'll be gathering around. Later they'll come back. See, just look at. So we have to stop here. I'll just take 5 questions as usual. Then we are done for today. Sparrow.
Yeah, I'm here. Can you hear me?
Yeah. Call 5 people to ask questions, please.
King Osas, you've been unmuted.
Good evening,
Yeah,
Trabi. Good evening, Sparrow.
we can hear you.
I want to ask you about that reclaim block. Before you enter, is it necessary to have a fair value gap?
No. Do you know why it fails? It fails because it doesn't have a fair value gap. It doesn't fit that characteristics. That's why it fails. So it's not necessary to have an FG here. Okay. The reason
Okay, what about the other side? What entry?
the re-entry that you enter at like around here, but that's what you mean.
Yes.
Okay, no,
Yes.
no, 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 no.
Okay. Thank you.
Okay, like those ones, no, it's not necessary. But if they have, it's better too. It's better so price can see what to feel. But if they don't have, it's not a problem. Like these ones here, these ones they have. This one's hard. There's an FG here, so price likewise just fill it and then that's where it's currently buying from right now. So look at it. Just like a break of structure or code that failed, it broke, make this place a strong high and later broke the strong high, which made the low a strong low. You know, first of all, what was here is a strong high. But after it broke structure, that was what made this place a strong high. And then it went above it and it broke the high. So once it broke the high, it made this point a weak high and made this low a strong low. And then you bought from the strong low. So that's it.
Thank you.
Yeah, you're welcome.
Hello, Bayo. You are muted. Sorry, can you hear me?
I can't. I don't know if the person that you called.
Black Jeff, you've been unmuted.
Good evening, Abigail. Good evening. I want to ask for this reclamation block, where should we take as our POI? Because I remember some time ago, I watched one of your video on Twitter. You made mention of when getting this reclamation block, we should use the last pullback candle on. I remember the video. I think I watched the video like last year, so the thing stayed in my head. So I want to ask: are we still following that model of the last pullback candle before the impulsive move?
That's if it creates it. Like this one is the last pullback candle, and that's why you expected it. Sometimes it do not create the pullback.
Okay,
candle.
what if it doesn't create? Okay.
If it doesn't create.
Okay, sometimes it doesn't create a pullback candle. So if it doesn't create a pullback candle, where can we now use as our entry?
You can use the last low. This last low as your entry. The last low. But price sometimes will snub it.
Okay, it will get to the last low.
Yeah, it can get to it.
Okay.
But if it has like this, this is a demand zone. This is a valid demand zone. It has an FVG. This is a valid demand zone. So that's why it's used this. In cases like this, you use the valid demand zone. If it doesn't, let's check the other one that happened the other time. If it's like long week like this, just use 50%. Like this one now was a long week. Just use 50% of it.
Okay, so like this now, you are saying that we'll be setting. We'll not wait for candle confirmation. We'll just set limit order.
Limit order where? From here.
Yes. So there's no need to. Wait, can we put a box there?
Choice.
What do you say?
Tell you. Confirmation entry is a choice. If that point of interest will play out, that confirmation will not make it not play out, and you can see confirmation and it still doesn't go well. First of all, confirmation works when a point of interest is correct. If a point of interest is not correct, even with the confirmation, it will fail. So first of all, you should look out for getting the right point of interest before talking about confirmation. Yes, that person that dropped that, yes, that's the SBI sweep break blah blah blah. But if you check the low, you probably do not have an FEG. So I would rather expect price to come there and even buy. Then I can enter it with a reclaimed block after. Let me show you something what I'm talking about. Like something like this. I'm talking about this person that dropped this screenshot here. I'm talking about something like this. If like this is not a valid demand, even if he later buys from here and it does something like this and then he buys, I would rather like once it breaks this high, enter from here. Like this will be my entry here. My SL will be below here. Simple. That's if he starts buying from here and I could not enter because this was not a valid demand, because some of them don't even mind. Some of these synthetic pairs are very useless. Supply zone is a point where you sell from, where sell orders are kept. I've been making use of these words now before now. Supply zone is a point where sell orders are kept, or would I say they are where selling pressure, where price has a lot of selling pressure. That's a supply zone where price has a lot of selling pressure, that if it gets to that place it could start selling just immediately. Okay, it's like indicates a point where traders are willing to sell from, like a resistance level where large orders are kept. And the opposite of it is the demand zone, where there's a lot of buying pressure, where buy orders are kept. That price gets to that place, it could reverse to buy, like a support level, support to buy, and then resistance to sell, when something is resisting to sell, and then when it has a support it goes up. When you have a support, somebody pushes you up, that's a support. And then when somebody is restricting you from climbing up, pushing you to come down, that's a resistance. So that person that asked, that's simply the meaning of this. Okay.
Abigail, please, concerning the reclamation block. So you are simply saying that once the market gets to your so what will you see before you enter? Will you set a limit order, or you will just enter once it gets to your once the reclamation block has been formed?
It depends on the particular entry you are using now. If you are using mitigation block, of course you set your entry at the FEG. Yes.
Okay, no, not mitigation, the reclaim block.
Yes, you set your entry there, except you are not sure of that zone. They allow price to go above it, then create this second reclaim block like here. I don't know if I will see any pair that created a reclaim block twice. I don't know.
See, analyze volatility. John 50, you will see it. I think I'm seeing something like that on John 50.
John 50.
Please check John 50.
This is
yes.
If you are not sure about a particular point of interest, the best thing you can do for yourself is to just allow that point of interest give you like some few things you would love to see, to know. Where did you see it? Is it for a buy or a sell?
John 50 for a sell.
A sell.
If you check from your H1 time frame. Yes, I think from where it is right now.
Like this current market price, you mean this side here?
Current market price. I think it's at structural.
Yeah, you mean this place?
No, I think that's the inducement. If you take it up, I think just take it up. Yes, I think around there. Yes,
Okay,
around
okay,
there.
okay.
Yes, check around there.
You mean this place here?
Have you seen
You
it?
snapped it now.
No, current market price. Current market price.
Current market price for a buy or a sell.
Current market price for a sell, yeah. Oh, my phone not go off. Okay.
That's you mean from here?
Yes, check there. Yes, from that zone. Check there. From there.
What did it do?
I think I think there's a reclaim block there. If you check, I think if you do analysis, you check. I think that's a structural what's it called? The DOF. I think I think there's a DOF there, and he
What's the
broke past the DOF,
DOS?
and it's not acting like what do you say? DOF, destruction of order flow.
People just started abbreviating this thing. Okay.
No, you are the boss. I think from my analysis, I think that place is the DOF. From my own analysis, so maybe you can reanalyze it and see if it's because I see
If
from
we
that what
start
I did, the
analyzing
analysis
this
I
thing,
did.
it's going to take time more. It's going to take time.
Okay, no, from what I did, that place I showed you just now, I think that was my DOF. That's the destruction of order flow. So and the market broke past the POI and has reclaimed it back. You get so that I was just trying to show you.
Even
If you trace
what I
it back
was
from
even like
to the current
talking
market
about.
price,
What did you say?
as if you trace it to the current market price, you will see it there.
Okay. I think somebody dropped
To
an
the current
example of
market price.
something. There's something I wanted to even like. Somebody dropped a
Okay.
chat on the group. What did they write? He said 11th February. I wanted to like show you example of this SBI something. That's why. Okay. Yeah, this is like an example of it. But the sad thing about this is that price. Okay, they have AVG, but it was not at the extreme. But I told you the safest thing you can do. There was I think I took this trade. I took the trade. Now this is a sweep number one. But what disqualified this guy? Let's check if it even has like it was around the 50% because I know I know entered directly. Yep, it's kind of at the 50%. But I will not enter directly from this point, but I will watch it. Now price came in here and then it presented this second reclamation, which is this. That is where me I can sell from, and that is where I will enter. So entry directly from here I will not. The reason is because it doesn't have an FVG and the like, but I will enter at this other reclamation that occurred here, which I will take to this point, and then that's just it. I think that's the only entry I'm seeing here. Yeah. So like this is an example of if the SBI is not maybe I say have to be above this guy. So if the SBI does not fit the criteria complete, then safe to say that I just allow price to come there, then later if it creates a reclaim block, this is a reclaim block, then you can enter, and that is it. I entered this. I think that person, let me highlight it. It was somebody that dropped it on the chat, on the Telegram group. I posted it, I think maybe on my status or Twitter, either of it. So this is it. The engagement, and then so yeah, I don't know if I will see another example.
Abigail, please, you've not answered my question yet, so please.
What was your question? Sorry.
I said, can you hear me, please, Abigail?
Yes, I can.
I said if there is no what's it called a pullback candle, so how will you be able to enter the market if there's no pullback candle in your reclaim block?
This is what I just
So
explained to you now.
are you going to pick 50% or 25% of it all?
That's if it's a week. That's when you talk about picking 50% or 25%. If it's not a week and it's looking scattered like this is still what you will do now. Allow price to tap in that because you are not sure, because it's just scattered. Allow any point of interest you are not sure of, allow price to come into that point of interest. There are a lot of models you use to follow up.
Okay.
Yeah, so that's what I was answering now. Will I just be talking what you did not ask me? I was talking about what you asked now. I was talking about
All
what
right.
you
Thank
asked
you.
me. Yeah.
Thank you very much, Abigail.
Yeah, no problem.
Horace, you've been unmuted. Hello, Horace, can you hear me? You've been unmuted.
Oh, sorry, I actually muted myself. Good evening, Abigail. Good evening, Sparrow. Please, I actually have a question, and this is it's actually quite off the chart, but it's trading related, which is about our psychology in terms of trading. Because I could remember back testing, and then I back tested using demo and all that derivative. I could remember flipping the 10K standard account to 38K within a few days, and then when I funded my account, it was the opposite. So I don't know if there's a meaning to that, like maybe backtesting on the demo account does not give you that realistic expectations as it should. I don't know if you have anything to say about that particular one.
That's true. See,
Yeah, when
demo is no money. It's just like it's hard for somebody to, let me just be honest with you. Do you know why people blow other people's money? And why even people that have money will still decide to carry money from others to blow it? Because they know that so far that is not their money, they can do it anyhow they like, anyhow they want. But if it's their money, they'll be very careful with it. Okay? And that's how demo is. You know that you have nothing to lose. So because you have nothing to lose, you do not mind doing it anyhow. And it doesn't give you this mindset if it was your money. So it has nothing to do with demo. I'm not even lying to you. Demo doesn't have anything like psychology. Demo is not building you. Demo is not destroying you. Demo is just keeping you the way you are to do whatever you want to do. If you decide to raise it up, fine. Decide to destroy it, fine. Because it doesn't have real effect on you, you do not know how it feels to lose money. I don't know if you understand me. Instead of you to use demo after this class, it's best you fund $5 and enter lowest slots, or $10 enter lowest slot. If you are somewhere that have been trading before and then you have losses, like you used to lose, and you have opened let me check, I think for unlimited leverage on XNES, the time I did it the first time was I think you need to have closed at least 10 positions, like in total 5 lot size. So if you are somebody that have been trading before now and total you have opened in your account, even if you lost them, was up to like 5 positions, then XNet should be able to give you unlimited leverage. Even in there of $5, you should be able to open at least 0.1 or 0.2 okay, and you can scale up from there. Just have a bit of the emotions involved in trading. Fear should enter you. You should feel bored, feel scared, every emotions, just feel it. You understand me? So you just have to have the emotions. If you do not have it, then you will not know how it feels to feel like how live trading feels like. That's just it. Demo trading will not take you anywhere.
Yeah, thank you very much. Yeah, it's actually been a while I traded demo. I've abandoned it for a while, for a long time. And then secondly, my second question is about some of these analysis you've done here.
Yeah.
And while you were teaching, I could recognize some of the patterns that their partners have traded. You understand? And the worst of it is that I traded these patterns and I ended up getting stopped, getting stopped out. And I lost a couple of my accounts, trading some of these patterns. And I'm like, okay, so what did I really do wrong? Because
You know the
I traded the
mistake you
pattern.
made, and that was what I told people, even my other group. Entry model is totally. Sorry, can you mute yourself? Because I think my voice is echoing, so it doesn't like spoil the recorded video when they watch it. So entry model is nothing. I say what joins all traders together is structure and liquidity. Entry model is nothing if your structure is wrong. You could use the worst entry model but be in line with structure and you will still make profit. So the moment, that's why I was asking somebody that just saw FVG anywhere and then it was just trading. I said you have to follow the order flow. I told you people, I said find your missing piece. That's why I see that most people were already showing, when we have not even learned entry, most of them were already flipping accounts, showing profit and all. Why? Because they already know their entry model, but they hit SL with those entry models. So what they were looking out for to learn was how to be in line with the structure and order flow of the market. So if you like, you can use the word best entry model, whatever you use, mitigation block, breaker block, whatever you think is holy grail, and you are not in line with the structure, people are buying, you are selling. I could show you so many places that mitigation blocks failed when you are trying to sell not in line with the market. It will fail, of course. Why will it fail? Because when you're trading against the trend, so if you do not get your structure, if after everything people are making profits, you're trading the same entry model or making losses, go back to check your structure. I would never trade a pair that I do not know what the trend is from the higher time frame. I don't check my structure from 30 minutes. When I want to check my structure, I can go even from the daily time frame down to the 4 hours time frame to get the real trend of the market. And I do not like rangy market at all. When I am checking my structure and I start to notice it's like kind of like taking me upwards and later it's bringing me down, coming back here, it's coming down. JPY pairs does this shit a lot. So it goes like this, come back. I don't trade pairs like this. I prefer, if you're going, go. As simple as that. Okay, so if you're not in line with the structure, no matter the entry model, even if you're familiar with it, it's not going to work. That's just the truth. The only difference between probably what you traded and what I'm trading is that I followed the entry model in line with structure. Okay, I do not trade randomly. I don't know if you get me.
Yes, I get you. So, my last question before I go. So, I was watching the price action of gold yesterday, right? And then there was a sell. The sell that actually led to the breakout because gold was consolidating. There was a particular sell that led to the breakout of that consolidation. And then, from my understanding of structure, is that the structure to buy or sell from at least has to be visible on a higher time frame to confirm that okay, this structure has hold some value that it
Yes,
is can
lower.
either
I
sell
don't rate
or buy from.
lower time frame structure. That's why
Yes, and then
using like okay, go on.
yeah, and then there was the particular structure I saw. It was later on as I started seeing different people buying from that particular place, and I was like, this structure wasn't actually valid on the higher time frame. Like, it wasn't visible, it wasn't there. Just some, it
Like
was
for
just kind
example
of
now there are a lot of trades that people will miss, okay, because to them gold is still like bearish or something. Okay, now there's one thing you should know when you follow. That's why you should have like a pair or two. Don't like about, have like a pair or two to focus on. Not today you're trading
can't hear
this
you
one.
at the moment. Are
Can
you
you
still
hear me?
talking?
Yes, I'm talking. Can you hear me? Can you hear me? Sparrow, can you hear me? Sparrow, can you hear me?
Yes, I
Yeah,
can hear you now.
I wasn't here before, but
Okay.
I can hear me.
Yeah, so I was saying to get the best structure, you have to get from the higher time frame. Most people will miss a lot of edge model because to them, God is bearish, and that's why they probably miss this buy. But well, we already caught it because what happened here is simply just reclamation. Okay, that was what happened here. It took it out and then it later bought. So whichever way, you just have to follow the structure of the market. Anyhow, you just have to try to follow the structure of the market. No matter the entry model you'll be using after today, if your structure is wrong, your entry will not hold, and that is it.
Um,
Sorry, please. I'm
so
very sorry. Please, I'm just Talia, please. For the mitigation block, what time frame do you use to check your mitigation? Your mitigation block, please. What time frame do you
The
use?
same time frame
Because
you use to
because
check your
mitigation,
internals.
sometimes I can see it on H1 and I'll go to M50. I will not see it anymore.
That time frame you use to check your internals, use it to check your mitigation. That's the time frame you're using to get your entry now. So
All right. Thank you, Sabigail. Thank you. Thank you, Sparrow.
All right,
sorry,
Lengi, you've been unmuted.
Sparrow, please, I'm very sorry. Let me just say something to Sabigo. So I actually took a trade today now of some pairs, and then I think I executed some of these structures that you talked about here today, and then price took me in profits for a while. I mean, there was literally no reason for price to reverse because it was good to go, and then price just reversed and then took me out of it. And it was one of these continuation models we talked about yesterday.
which of
Took
them?
and then price. Yes, that's using the mitigation block. Using the fair value. Actually, to the I think I shared it to
Remember
trade
what I told you
on
people.
YouTube.
Remember what I said before. Some pairs do not expect mitigation block. Reason is because mitigation block has to occur in a trending market. A market where price has to keep moving. It's not stopping. For example, now this one now that price took out this thing, this was a ranging market. You cannot see me trying to buy for mitigation block inside here. No. So when something keeps ranging, mitigation block, that was the definition I gave to people yesterday. You cannot see me trying to buy for mitigation. Instead, I would rather use reclamation. That is, price should take out point of interest before entering. So after price took out this guy, and then I saw this entry model where somebody would have bought from, it happened in the structural liquidity. So whether this FVG all these things did not occur in this as the last low, this is simply just a structural liquidity and nothing else. This is not a point of interest. Except you're making a point of interest and your SL is below here, then fine. If not, this is not a point of interest. So to avoid the whole confusion, I rather just allow price to do whatever it like, which it did It simply took it out, and then it later bought after taking it out, and then I continued from here. It's as simple as that, nothing more and nothing less. So if you check a particular pair and they do not respect mitigation block, have you tried checking other entry module? Because if you have an entry module inside all of these that I respect, like this gold does not respect um breaker block. It doesn't like it. Okay, it doesn't respect breaker block. So using breaker block on gold, it won't respect it. I don't even waste my time. So when you check all of these, you like just know which of them works, which of them doesn't, and all of that. So just check the particular pair, you know. I use mitigation block. I use reclaim block. I don't use SBI, but I look out for it. If price tap on it, I use mitigation block to continue, or if it's like a pair that should respect like gold, that can respect mitigation block, I use mitigation block as well. But I don't like buy or sell directly at the point of interest, because majority of times they do not hold. That's the truth. That's just the truth. Majority of times, even with the sweep and everything complete, they do not hold. Do you understand?
All right. All right. Thank you very much.
Yeah, you're welcome.
Mm.
Good evening, Shabiga.
Are you the last person?
I yes,
All right.
No,
so I wanted to be
sorry, it
clear
should be
on.
Nengi first, and then Frey should ask. Can you hear me?
Is this the last
Yeah,
person?
No, Nengi should speak first before Frey. Frey should be the last person.
Who is Nengi? Okay, the Nengi should speak.
yeah. Okay, yeah. I wanted to be clear on something. You know when you're marking our
Is that the
internals, you said
Nengi?
big to bed.
Sorry, is that the Nengi?
Yes, yes, yes.
Okay.
Yeah. So I just wanted to be clear when looking out for reclamation block. Does it have to does price has to take out your zone with a week before you look for okay reclamation, or if it takes out your zone with a body, there's no need looking for that because I'm a bit confused on that aspect. So I just wanted
Okay.
to have more clarity on that.
Now, it depends on what it does when it comes to your point of interest. For example, if it comes here and it takes it out like this with the body of the candle, okay, and you have your mitigation block here, you are free to sell. Example, this one here, you're free to sell. You close this with the body, but if you close with the wick like it did here and it comes above it, you are free to buy with continuation. But if you close with the body and it comes above it and you are uncertain, because first of all you do not have a sell point of interest, likewise do you have a buy point of interest, allow it to create either of these point of interest and follow suit. For example, if after it takes this out with the body and it starts coming up again and you don't have a sell point of interest, wait to see price create opportunity for you before entry. But overall, once it is weak is not a break of structure, it's not a change of character. For any of weak break of structure anything to occur, It has to be with the body of the candle. Officially, break of structure is the body of the candle. So
All right. Thank you very much.
okay, the last person, please.
Your question.
Hello, good evening, Abigail.
Yeah, good evening.
Sorry, please. The last time I asked the question, you said let's get to the entry session. I was asking about the fib because you've not really been using the fib for a while now. Because last question I asked, I was like, what if our inducement is on the 50%?
Equilibrium.
So you said till we get to the entry. Yes, what if it's on equilibrium? Yeah.
Yeah, I remember your voice. The person I asked if you're young, like you're very young, I remember you. Okay, what if price is at the equilibrium level? What do we do? Now, what is equilibrium first of all? That's when price is currently at a point. Let me draw this. If this guy is here, it means that what is simply at an indecisive position where you should not trade directly. That's even one of the reasons why you should not trade directly from here if it's like at the middle. Because let me put this. Um, Now it's like saying that neither the buyers or the sellers could push price the inducement below this point. So what you should do is just allow price to come into your disruption first, then see price reaction from there. There are some pairs that their inducement is even above 50% and the trade still good. Okay, so if it is here, it doesn't stop it in, just allow it your price to come to your own point of interest where you're looking out to buy from, then see the reaction from there.
Okay. So, according to today's class, in summary of it, to me, are you trying to say you prefer using either the mitigation block or the reclaimed order block to take your trade?
It depends
Because
on the
sometimes even if we have
yeah, it depends
okay,
on the pair. Oh.
because
That's why I actually explained all of them. Okay, it depends on the pair because some pairs you can trade them directly from their point of interest. Okay, I'm talking about me. Like now that I was trading synthetic for a while and then I came back to gold now. Talking about me that is trading this gold, I have told you the things I have observed, my own personal observation, which you too can still check other pairs to know. Based on my own personal observation, this is the
okay,
working system for gold. GBP USD, sometimes is a USD card or uh forgotten. Is that USD card or USD JPY? One of that. Then BTC, Ethereum. The few of them I've checked. I cannot check all pairs. Most pairs range. So you cannot carry what works for a trending market to trade a ranging market. Most pairs can range for months. Yeah. But in all,
Okay,
just
no
allow
problem.
price to come in there and then show you some patterns to know that yeah, he actually wants to buy.
Okay, no problem. Thank you very much. That's all.
Okay. Sparrow, that's the last site. Sparrow.
Yeah, that's the last question. Can hear you. That's the last question.
Alright. Since that's the last, we have to end here. This is over like almost 2 hours, if I'm not mistaken. So we have to stop here and see you in the morning class on Wednesday tomorrow. Oh my god. Okay, see you tomorrow morning class. Thank you.